Let's take a look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to spread the word of how BTA analyze the market, how we look at the market. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top, but we are going to make money in the middle. Now, this is part 2 of our end of day analysis for Wednesday, June the 22nd, 2022. This is part 2. In part 1, we looked at the major market index ETFs on the daily chart. Now we're going to look at the actual index itself real quick, and then we're going to look at some weekly levels for the major market index ETFs. So right now you have a daily chart of the Dow Jones Industrial Average. This is the actual index itself, the Dow Jones Industrial Average. And what I want to bring to everyone's attention here is that you see we found resistance at these two horizontal resistance areas right here. The first one is at 30,504. This one here, and the upper resistance level is 30,635. We closed at 30,483. So 30,500, 30,504, 30,635. These are the two overhead resistance areas that we have to stay above. So we tried yesterday. We got above the first level. We got rejected right at the 30,635 level. Okay. Today, we tested it again. And we got rejected once again. So that 30,504, 30,635 level is strong. It's strong. So for the DIA, this is our overhead resistance right here. Today, we tried to get above it. We traded well above it, but we closed below it. It's about the close, y'all. Where do we close at? It's not where you start, it's how you finish. Haven't you heard that before? It ain't how you start, it's how you finish. Is it a finisher? Are you a finisher? Okay? It ain't how you start, it's how you finish. Right now, on the close, we finished below this resistance level of 30,504 and 30,635. We got to get above it. See this big, thick red line right here? That's the March 2020 highs right before the corona collapse. The March 2020 highs. This big, thick red line right here. Watch out for that. That's serious support. So that's the Dow Jones. Okay, so now let's take a look at the Standard & Poor's 500, the actual index itself. This is a daily chart of the Standard & Poor's 500, the actual index itself. Okay, look at it. You see it. We came right up to this red overhead resistance level at 3,810. You see that? We traded today right up to it, and it got rejected. Okay, that's overhead resistance at 3,810. Okay, 3,810. Basically, might as well say the 3,800 level, all right, for easy memory. The 3,800 level. You see this here double bottom right here? Well, that's the low of the second bottom or the double bottom. Then we fell into consolidation, then it fell apart. Well, we right at the lows of the second bottom, 3,810, the 3,800 level. We have this internal trend line going across here. We stayed above it for the last 2 days. We're staying above it, but it's a downward trending internal trend line. So if we stay above it and constantly stay above it, it'll be going down. Well, that's not a real big improvement. We got to stay above it and then get up and get above this overhead resistance at 3,810. So this is the Standard & Poor's 500. That's where it's at. You see the overhead resistance? So before we buy the ETF, we always going to look at the actual index itself and see if it's breaking the levels. Is it getting above the overhead resistance? If it's not, then we got to be careful, because the ETFs that track the major market indexes, don't forget that. These are the ETF that tracks the major market indexes, all right? So we always going to look at the major market index itself. Well, you see the indexes are right at key overhead resistance for the Dow Jones and the Standard & Poor's. Let's see about the Nasdaq. We got to see the indexes get above that and then break it down to the ETFs that tracks the major market indexes, okay? So this is the Nasdaq Composite itself, the actual index itself, a daily chart of the Nasdaq Composite. Do you see that? Do you see that double bottom? Okay, see the double bottom right here? Remember that double bottom? We broke out, went into this sideways consolidation. This is the second bottom of the double bottom. This horizontal overhead resistance level is where we've been closing at for the last 2 days, right on it. And you see this internal trend line going across here? These are two internal trend lines. They're going right across there. We've been getting rejected at those two internal trend lines. Those trend lines are coming from way back, the March 2020 lows, the low after the Corona collapse. That's where those trend lines are coming from. And it's coming across these bottoms right here. We're getting rejected at those two trend lines, but we're trying to hold support at the 11,035 level, 11,035. Okay, we closed today at 11,053. This horizontal resistance level, which is now trying to act as support, is 11,035. But these overhead, these upward trending trend lines from way back from the March 2020 lows, these trend lines are coming from way back there, going across these fractals. We are finding resistance right at those two trend lines. You see, we got to get above that. So you have to look at the Nasdaq Composite itself and then go down to the major market index ETF, which would be the QQQs. But no matter what the Qs are doing, if we can't get above these horizontal overhead resistance levels on the actual index itself, look out. Are you picking up the jewels that I'm dropping? Be careful. Do you hear me? This is not financial advice, but wouldn't it be wonderful if it was? Wouldn't it be great if it was? If it was, but it's not. But if it was, you see how you can't lose a lot of money? Are you hearing me? Can you hear me? Are you digging what I'm saying to you? You have to track the major market indexes itself. The ETF tracks the major market indexes. You have to keep an eye on the major market indexes. Right now, we have key overhead resistance on all three of the major market indexes. Okay. Let's now look at the weekly chart of the ETF. Now we're going back to the ETF, but we're gonna look at it on the weekly chart really quick. We're gonna start off with the DIA, okay? Because it is something that we gotta look at very fast, and it's very clear. This is gonna be easy. See that 150-week moving average? You see that magenta line? This is the 150-week moving average right here. You see the DIA tried to get above it and got rejected and closed right at it. Down here, the 200-week moving average. This is the weekly chart of the DIA, the ETF that tracks the Dow Jones. The 150-week moving average is overhead resistance. If we can't get above that, I don't see no reason why the 200-week moving average, this brown line, won't be next. Okay? The 150-week moving average, okay, right around 305. Right around 305 is where it's at. We got to be careful. We find a resistance right there. And we got that downward trending 4-week moving average in white that's right overhead. But the 150-week moving average right here, this magenta line right here, is the one we got to look out for. We're finding resistance right at it. Okay, we got to get above this 150-week moving average. So whatever we looked at on the daily chart, make sure if you're breaking the levels on the daily chart, just make sure you peak at the weekly chart and make sure you're above this 150-week moving average. That downward trend 4-week moving average, could give you a problem. But that 150-week moving average can hit you clean in the head. Be careful. Let's look at the Standard & Poor's. Well, before we do that, let's look very quickly at the structural chart of the DIA. This is the weekly chart of the DIA with our structural chart, our support and resistance levels, and our trend line. You see that? 304.66 right here. Overhead resistance. We closed right at it today. Right here. This overhead resistance, long-term weekly resistance level, 304.66. Take a peek, y'all. Are you digging what I'm saying? Don't just trade the daily charts and you got long-term overhead resistance levels right overhead. You make the trade, you trade up and it get rejected, bang, you got your head handed to you, and then you want to blame the market. No, it's not the market. It's the rules. It's the rules. Now, if you look at the on-balance volume, okay, the on-balance volume is clearly below its previous low. Okay, so the volume is not coming in yet on the weekly chart. Let's switch over to the Standard & Poor's 500 real quick. This SPY, the ETF that tracks the Standard & Poor's. Let's go to the key moving averages. Look where it's at on the 150-week moving average, y'all. Look where it's at. Closed right on the 150-week moving average. Closed right on the 150-week moving average. Just a little bit above it, okay? We got to stay above it. We got the downward trending 4-week moving average right overhead. It's a lot of stuff overhead around here on the daily and weekly charts. So pay attention. 150-week moving average for the Standard & Poor's has to hold that support. If we break below it, can't get back above it, I see no reason why the 200-week moving average may not be next. Okay, let's go now. Take a peek at the daily levels we talked about in the first part of this and make sure you keep an eye on these weekly levels. Now, let's look at our structural chart for the SPY, the SPY, ETF that tracks the Standard & Poor's 500. This is a weekly chart. You see that 380.54 level? We talked about it in the first part on the daily charts. 380.54 right here. We got rejected and it pulled back. We held support at the 371.88. If we break below 371.88 and close below it and stay below it, I see no reason why 359 is not next. Okay, so 380.54 is the level on the weekly chart for the SPY. Keep an eye on the 150-week moving average. We got to stay above it. Look, I'm just showing you the levels. Just don't trade off the daily chart. Keep your eye on the weeklies. Here's the SPY. Okay, on balance volume. You see the low? You see the magenta line? The green line of closing prices up top? You see the green line of closing prices up top? Here's the low. We got a vertical going straight across the lows of the closing prices. It's at the low of the on-balance volume. You see we're still below it. Accumulation distribution line still below it. We got a downward trend line here. We got a downward trend line on the price volume trend, and we still below it. The volume is not there yet on the weekly chart. Okay, it's clear. It's clear. Be careful. Let's take a step down and look at the Qs. You see the overhead resistance? You see this trouble we got with these charts, these weekly charts? Don't let the daily chart or anything fool you and you get hit by the weekly chart and have a problem. I don't want to see that happen to anyone. The prices, the longer term time frame commands the most power. The longer term time frames. Here, let's look at the weekly chart with our key moving averages for the QQQs, the ETF that tracks the Standard & Poor's. Forgive me. The ETF that tracks the Nasdaq, the QQQ, the triple Qs, the ETF that tracks the Nasdaq, specifically the Nasdaq 100. Look at it. You got a downward trending 4-week moving average right here. Overhead resistance for the Qs. You got a sideways overhead resistance, 150-week moving average, and you got that green line, which is an 8-week moving average. It's all right there. Woo! My goodness. A lot of overhead resistance. We got to break through it. We fighting. But guess what? The Qs might get tired. Because if the volume not coming in, it ain't got no gas. Running out of gas, baby. Running out of gas. So look on this weekly chart. You got the 150-week moving average overhead resistance. You got the downward trending 4-week moving average overhead resistance. You got the downward trending 8-week moving average. It's a green line because on the daily chart, our green line is a 9-day moving average, right? So sometimes I get confused. I'm sorry. That's an 8-week moving average on the weekly chart. 4-week, 8-week, 13-week. 1 month, 2 month, 3 month. Hello. Make sense? So we got the 4-week moving average, the white line. We got the downward trending 8-week moving average, the green line. We got downward trending 13-week moving average, the yellow line on the weekly chart of the Qs. But the problem is the 4-week, the 8-week, and the 150-week is all right here together. Hey, we might rally right up, but we got to get through a lot to keep going. Pay attention. Are you picking up the jewels that I'm dropping? I hope you are. Ka-ching, ching, ching. At least you won't lose money, but this is not financial advice. But wouldn't it be wonderful if it was? Now, here, let's look at the weekly chart of the QQQs, our support and resistance level. Look at this, y'all. You see it. You see these internal trend lines right here? These trend lines going across the bottoms. Internal and the one here at the bottom going across the bottoms. You see what's happening here? These trend lines are going all the way back to the lows of March 2020. You see you're getting rejected right at it, found a resistance right at it. Can you get above these trend lines on the QQQs? You see that? We're getting rejected and we below this low right here, this fractal, which is at 280.21. We closed just right above it. We closed at 280.67. It's at 280.21. But guess what? Those upward trending internal and outside trend lines going all the way back to the March 2020 lows to present, it's causing a headache. Overhead resistance, you see it. We got to get above that, and then maybe we could come up here and test the 303.50 level if, and only if, we could get through all of those key moving averages on this weekly chart that's standing right over our head looking at us. Be careful. Please be careful, okay? Because 303 is looking great, but you got the 4-week moving average at 287. You got the 8-week moving average at 294. You got the 150-week moving average at 292. So to get all the way up here to the 303 on the structural chart, woo, got a lot to go through. And you got this internal trend line. Right now, we're sitting right on the support level of 208, which was prior resistance. You see the on-balance volume, accumulation distribution line. You see the volume is not coming in. You see it. You see it. Here it is. You see it. Right here. Okay? See that? The volume is not coming in yet. You see the green line of closing prices right here. We put a vertical line right across the lows. Okay? And then we drop that horizontal line here. That vertical line straight down and the horizontal line right across the lows. You see that right there. What the on-balance volume is doing? Well below it. Look at the trend line going across the highs of the accumulation distribution. We're still below it. Look at the price volume trend. We're still below it, okay? The volume is not there yet. If it ain't got no volume, it ain't going to have no gas. If it ain't got no gas, it can't travel too far. And if it can't travel too far, that overhead moving averages are going to stop it in its tracks. Here's the IWM. Looking mighty grim. Okay? Sitting below the 200-week moving average, and you got a downward trending 4-week moving average, downward trending 8-week moving average, downward trending 21-week moving, 13-week moving average in yellow. But the thing is that the IWM is well below the 200-week moving average. You see it right here. It's well below the 200-week, 150-week up here, but you got the downward trending 4-week and downward trending 8-week. That's all below it. A lot of overhead resistance. Let's look at it on the structural chart. Got to get above some of this. Got to get above some of this. All right, let's look at it on the structural chart real fast. Okay, let's look at it on the structural chart. You see it? I'm trying to tell you something. Don't let nobody fool you. Don't listen to these people on the news. Cut the junk off. You see this here red, thick red line? You see that red, thick red line right there? Can you see that big, thick red line right there? That's the March 2020 highs. You see you're below it? You're below the March 2020 highs right before the corona collapse. Be careful. You see this here crayon trend line going right across these lows? That's a trend line going all the way back to the March 2020 lows. You see it's acting as resistance? You see it? We below all of it? Look at that confluence right there. Look, you got the March 2020 highs sitting there right there looking at you, okay? You got the March 2020 highs looking at you as overhead resistance, all right here, this real big, thick red line, okay? And then you got another fractal right on top of it at 170.56. And then you got this here upward trending trend line coming from the March lows right on top of that. Look at all of that right there over your head. Don't just look at the daily charts. You got a lot of long-term overhead resistance. It can hurt you. Please, I hope you're picking up what I'm dropping down. Look at the on-balance volume. The volume is not there yet. You see that volume? You see that vertical line I got going across straight down from the lows? Okay, you see it? See that vertical line? See the on-balance volume here, the vertical line? Here's the lows. Look at the on-balance volume. It's below it, trying to turn, but it's below it. Look at the accumulation distribution, downward trend line, and it's below it's below its low. Okay? The volume is not there yet. You ain't got no gas. You ain't traveling too far. Ain't got no power. It's just not happening. Let's finish this whole thing up with the ITOT, baby. ETF, Standard & Poor's Total Market ETF, U.S. stock market. We're trading below the 150-week moving average. See that right there? See that 150-week moving average? That downward trending 4-week moving average, the downward trending 8-week in the green. But the problem here right now, the immediate problem is this 150-week moving average. We're below it. Find the resistance at it for the last 2 weeks, this last week and this week. We got the downward trending 4-week moving average. If we can't get above that, say hello to the 200-week moving average down here at $79. Say hello to it. You see that volume. Say hello to it on the downside. Say hello to that 200-week if we can't get above that, okay? Be careful. Don't just look at the dailies. Please look at the weeklies. The long-term trend is going to command the most power. You see the structural chart? See, we can't get above this fractal right here at 84.59. Do you see that? You see that fractal right there at 84.59? Let me bring this up so you can see it. You see that? Right here, 84.59. Overhead resistance right at this fractal. You see it? The second week is below it. We're forming an inside week. The fractal right there, 84.59. We at 83.18. We got to get above that, people. We got to get above that. You see this 150-week moving average overhead, 84.59 on the structural chart. Downward trending 4-week moving average at 85.57. Look at the volume. Do you see any power? Does it got any gas? Gas prices are high. Don't want to go get no gas? But you ain't going nowhere on this chart, right? Look at that. The line of closing prices right there. Look at the vertical line going across it. You see the lows. We well below it. You see the lows. We well below it on the accumulation distribution. You see the lows. We well below it on the price volume trend. Sum it all up. The major market index ETFs. The major market indexes. Overhead resistance everywhere we look. The major market structural chart. The ETFs on the weekly chart. Overhead resistance everywhere we look. Be careful. Be careful. Please be careful. Watch yourself. See you in the next video.